long-term plans like, oh, what if I have to leave here quickly?
Yeah.
Boy, I better have some Bitcoin, and I better
In
have
self-custody.
right, in self-custody. I better know where I have it and be ready to leave with it. This kind of thing. Not that that's a likely thing, but more likely now than ever before.
All right, welcome back to another episode of The Weekly. I'm Graham Stone, joined by David Sencil. David, take us through the week in war. What's happened since our last The Weekly episode?
Newsflash, the war in the Middle East continues, Graham. But I don't know about you, I am getting a bit fatigued at the rate of information and misinformation coming out from all sides of so-called official sources from the US, Israel, and Iran. Not to mention the orders of magnitude of even more content from expert pundits and podcasters like myself and you. So we have to cover the war, obviously, but let's try to add as little as possible to this already oversaturated conversation. Having said that,
Right.
War information. So this time last week, if you recall, Graham, you and I were on the show anticipating the outcome of Trump's ultimatum.
Yeah, we were 24 hours away from the first ultimatum, which of
That's right.
course got pushed back by 10 days, I believe.
There's varying reports on how long it got pushed back. 5 days at the beginning, 10 days later. I don't know.
Yeah, every post on X has a @Grok is this true under it. And you're like, okay, what does Grok think is true?
Yeah.
And then who knows what
And also,
how correct Grok is, of course.
but even Grok will be like, it's true that some source connected to the White House or the IRGC or, I don't know, the IDF said this. We don't have any evidence to back up whether that thing that they said is true. This is this is probably for me the most maddening, fatiguing thing about the whole situation is people who are this kind of should be the source of truth, the White House, IRGC Parliament guy, IDF spokesperson, and then they're just like talking out both sides of their mouth, right? And it's just, Anyway, so that was walked back, of course. President Trump said on Truth Social, of course, that they were going to pause and wait. There was later, I think the next day, stories swirling about a 15-point ceasefire proposal via Pakistan. Meanwhile, while these reports of this 15-point plan were being posted, there was also moves of U.S. forces in the region, Israeli forces in the region, missile strikes from Iran. Iran apparently rejected the U.S. ceasefire plan. We don't know if it was rejected. We don't know if they saw it. We don't know if they were talking to them. But in any case, apparently it was rejected, and apparently they issued their own conditions, and these demands included things like ending the attacks, reparations, control sovereignty over the Strait of Hormuz. This was ignored or rejected or negotiated, we don't know. Saudi Arabia's East-West pipeline hit their capacity, which was 7 million barrels per day. The Houthis in Yemen threatened to enter the war, potentially slowing down this new path for oil to reach markets. All during this, like I just said, attacks continued. The kinetic conflict didn't seem to kind of slow down whatsoever. So here we are. It's Monday morning in Asia, Sunday night in North America. We're all kind of anticipating what has become the kind of gruesome or macabre flow of information for the past month, which is Friday to Sunday. When traditional markets are closed, Friday to Sunday, escalate the rhetoric online, maybe increase attacks. Sunday night to Monday, talk down markets. Say that there's peace. Say that we've made progress. During the week, so from Monday to Friday, keep posting conflicting information, sometimes multiple times a day throughout the week while kinetic conflict continues. So funnily enough, here we are. It's Sunday night, Monday morning, depending on where you are. And already there have been reports that, for example, Donald Trump indicated that a deal with Iran is within reach and may be finalized in the near term. So already starting to try and talk down markets entering into Monday morning. It looks like the gruesome pattern, the macabre pattern is going to continue. Meanwhile, the New York Times like an hour ago, just reported that the U.S. has deployed 50,000 troops in the Middle East. I think, personally, this week we're likely to see a new phase of the war, American boots on the ground. And that is where we stand, Graham, as of right now.
Yeah. Polymarket is giving 71% odds that forces enter Iran by the end of the month. So the market is agreeing with you, David.
Yeah. Yep. I think it's going to happen. I think it's going to happen this week. Is there a poly market for this week? I should put on a cheeky little wager, gruesome wager.
Yeah. All right. Let's talk about Bitcoin for a minute. It's Bitcoin currently.
What's that?
Yeah, it's at times an asset with geopolitical implications, or an asset that is traded around geopolitical implications. Currently trading at 66,500. Once again, below the 200-week EMA. We have oil above 100 again, spiking as high as, I think, 106. Currently trading at 102. This is the WTI crude. As people are pointing out, is no longer reflective of what the actual global price of oil is.
Well,
markets are bifurcating.
Yeah, so that's apparently, I mean, if you listen to some of these macro analysts, that's going to continue even if this conflict resolves or kind of goes to a low simmer. A global price for oil looks like it's going to not be, there isn't going to be a global price for oil pretty much moving forward, at least for the next year or two minimum. So that era is done of having like a global price. It is going to be region based. That's going to be a new reality, I think, moving forward.
All right. You have quite a few doomers. Steve Hanke has come out in an appearance on the David Lynn report. This is Steve Hanke, the Johns Hopkins economist. He was an advisor to the Reagan admin way back in the day. He frames Iran's position not as a nation under siege, but as one quietly winning a war of attrition. He points out that Iran has called up over 1 million troops and obviously controls the choke point on which the global economy depends. Quote, "They are in control of the Strait of Hormuz. It looks to me like they are going to continue controlling the strait, and in that sense, they have a lot of leverage over the West. They have Trump completely in a corner because the Western economies are suffering tremendous damage already." He also points out that the federal government holds roughly $6 trillion in assets against nearly $48 trillion in on-balance sheet liabilities. Plus, when you add Social Security and Medicare, both off-balance sheet, total liabilities exceed $136 trillion. So he says, quote, "You have a little over $6 trillion in assets. It's a complete catastrophe. That means you're insolvent. It's a complete catastrophe, and the numbers are deteriorating rapidly." People have pointed out that the bond market is reacting. Rising 10-year Treasury yields reflect investor concern over the deficit expansion. And Hanke notes that the relationship between higher yields and lower gold prices, it's not because of gold's long-term, the long-term case for gold hasn't changed, he opines, but it's because rising interest rates increase the opportunity costs of holding non-yielding assets. And he maintains his gold price target of $6,000 to $7,000 for the current cycle.
Yeah. So
Steve Hanke weighing in, pointing out that the economic implications are dire for the West, and Iran has a lot of leverage here.
Yeah, we spoke about this a little bit before we went live. I would say that this kind of doomerism is everywhere on the I don't know, geopolitical, macroeconomic, tourism, social media, podcasting space. I certainly was kind of dialed into this as well. But over the weekend, I branched out and I listened to other parts of this space. Neil Ferguson was on a great podcast.
Neil Ferguson or Niall Ferguson?
I'm pretty sure you say Neil, even though it's spelled Niall.
Okay.
Right?
I gotcha.
Yeah. Mr. Ferguson, he appeared on this podcast, and it's interesting to hear what like military people say about this as opposed to economists. So on the kind of the military leverage side, I now have I've moved back a little bit in terms of how I think about it. And I encourage people maybe to take what economists say about kinetic conflict with a big grain of salt. To say that Iran has all the leverage after what America and Israel has done, on the face of it, if you really just kind of look at it, is really retarded. It just doesn't make any sense. This is not to say they don't have any leverage, but just the kind of the crazy doomerism about that is again, once you kind of like look through it another lens, you're like, oh yeah, that's dumb. However, Ferguson does agree with kind of some of the economic takes here. Neil Ferguson has said this years ago, warned about it, I think like a year and a half or 2 years ago. I was listening to a podcast on this. If you look at history for a country that spends more on interest payments than they do on defense, right? So for their debt, if they spend more on interest payments than they do yearly on defense, historically, the empires or the strong countries that have done this do not last very long afterwards. And America is currently in that situation where they're spending more on interest payments than they are on defense. So not looking good from that perspective, and something has to be done.
Maybe to add to that, Brent Johnson has pointed out that he's saying that the Republic of the United States is over and the empire phase is beginning. And he pointed out that the similar thing happened in Rome, where the Republic died, and then you had 300-400 years of empire after that.
Yeah, exactly. Brent Johnson just he released his weekly podcast, and he was very sober and in turn sobering on the podcast. So it does feel like we're finally, you read, is it Neil Howard? I could lose my name. The fourth turning guy, right? 1990s. We're entering a new era. You have all these economic historians like Neil Ferguson.
Last out of the room for a decade, basically.
Brent Johnson's milkshake theory, again, for years and years and years, things are going to end. We're entering a new era. And God, here we are. It looks like we finally are here. And it's pretty wild. The real question, Graham, is not to answer on this podcast right now, though, but I really want to focus on moving forward, maybe token narratives or interviews, is really like, what does this mean for Bitcoin and crypto? And what can Bitcoin and crypto do in this new regime that we are in, right? Where major commodities are bifurcated. There's no longer a global price for things. That the spread between Brent and widen or remain as wide. You're going to have, like Brent Johnson was talking about, like how the two currency system, which he's talked about for years, that might finally be starting to be here, right? Like a yuan-based one or a dollar-based one, to give these spheres of influence, this kind of thing, rapidly approaching, faster than I thought. Yeah, where does Bitcoin and crypto go into this?
Yeah. Brent Johnson seems convinced that stablecoins will play a very big role in the new order. If that is the case, I would say it's just you're one step, once you're on digital rails, blockchain rails, you're one step closer to self-custodying an asset like Bitcoin, which to me seems very bullish. In addition to Bitcoin, and in addition to that, just the lack of for an asset that it's not really about the economy, like an asset like Bitcoin. It's not about like your profit and loss statement. It's just a narrative asset in a world where the S&P 500, the NASDAQ, companies start getting in trouble because of a slowing global economy or disruptions in the world. Other assets that aren't tied to profit and loss statements stand to benefit. So gold, commodities, precious metals, and Bitcoin.
Yeah. I'll tell you this, like that cypherpunk kind of values or axioms of early crypto of decentralization, transparency, immutability. And then like what we saw when people were trying to leave the Middle East at the outbreak of this war, they had a lot of gold, had trouble converting it into another asset that they could then leave with. It really does make me think. So there's just so much increase of risk in the world. It just makes me want to have Bitcoin, kind of like as insurance. Like obviously I live in Asia, but I'm an American, so I do think about like just long-term plans. Like, oh, what if I have to leave here quickly?
Yeah.
Boy, I better have some Bitcoin, and I better have
self-custody.
Right, in self-custody. I better know where I have it and be ready to leave with it. This kind of thing. Not that that's a likely thing, but more likely now than ever before. And I do think in a world of where there's more risk, a lot more risk, and more chaos, and that's breaking down like that, then something like Bitcoin becomes much more important, and the value of it, the utility of it becomes readily apparent to everybody, even over gold, right? So yeah, that's kind of how I'm thinking, just the very beginnings of it in terms of the role of Bitcoin in this new world. And I do think a lot of people are going to kind of return to that like.
All right, let's move on to some other news that's not directly related to the war. David Sachs, the crypto czar, is no longer the crypto czar. He maxed out the period, I believe it was 180 days or something, that he was allowed to be in that role. So he's no longer the crypto czar. Let's get into a little discussion here, David, of whether or not he was a success, whether David Sachs, the crypto czar, was a good thing for crypto in the United States and in the world. Before we get into this, David, do you lean one way or the other?
Yeah, I mean, I think I probably leaned just overall towards him being a good crypto czar, just because it's a new position. Crypto was in such a bad place with regards to the U.S. So I guess it's a low bar, you could say, that he had to clear, and I think he cleared it. Right? I mean, could he have done better? Yeah, I think, obviously, but I overall think that crypto's in a better place in the U.S. than it was when he became the crypto czar. Now, how much could that be attributed to him? Whatever. Just in general, that's the way I lean. How about you?
Well, yeah, that makes sense. I have seen quite a few people. It seems like the consensus, at least on my timeline, is that no, he was not a good thing for crypto. People are pointing out, the Trump family crypto grift has done a lot of damage to the space. What could David Sachs have done to stop that? I don't know. But beyond that, one of the big things that people in the Bitcoin community have been asking for is at least a de minimis tax exemption for BTC spending. That obviously didn't happen. Beyond that, Ross Ulbricht got clemency, but meanwhile, you have privacy founders in the crypto space, the Samurai Wallet guys and others, in jail now. So I don't know. That seems like a pretty big fail. These are some of the points people have been making.
Yeah,
for why
the first one,
Sachs. Yeah,
the first one doesn't make sense, right? That's the Trump family. He has no leverage over telling anyone who has leverage over Trump and his family to do anything, really, whether it's the conflict in the Middle East or on crypto. So I don't know. I don't really think you could lay that at his feet. The privacy founders, that's an interesting thing to lay at the crypto czar. I don't know how much influence he has over that. I mean, honestly, I would love to see some information on that. Like, how much does, I guess because he's in the admin, he would have some ability to sway the DOJ, I suppose. So yeah, maybe that. The de minimis tax exemption, to me, this seems like something new, though, right? Like, who was talking about this really 2 years ago?
Yeah, well, it has been a talking point forever in the Bitcoin community.
No, I agree. But no one was. I mean, we report on this stuff all the time, right? When was that like a major talking point in the past 2 years? I thought it was like BTC Treasury and this reserve thing. And anyway, so you could say on the success side, probably like the Genius Act is probably the most concrete thing that you could maybe attribute to him, right? This thing got passed while he was a crypto czar. The shift in the SEC, some amount of that has to be his responsibility too. SEC and CFTC, that has been so radical. I imagine he has something to do with this. Crypto task force, these meetings, regular meetings on Capitol Hill related to that. Other things that are maybe tangential to him is the Bitcoin reserve. That's whatever you want to call it, the holding of the digital assets. Again, how much can that be attributed to him? I don't know. But again, those are related. So on the negative side, clarity didn't get done while he was in charge, although it looks like it is going to happen. Many people that you and I listened to, though, they were predicting last year that because Genius took so long and it was so hard to get that passed, that they didn't think it was going to be done last year, and they thought it was going to be a hard fight this year. So again, a hard thing to do. The Bitcoin reserve, while it did get created, it wasn't a strategic reserve in terms of they're going out and actively buying on the market. Who thought that was going to happen though, really? And then, yeah, you could say that there's been a lot of negative perception politically. So crypto has just been kind of become a wedge issue almost for between the Democrats and Republicans. And so it could be bad for crypto, let's say in the midterms. The midterms are not looking good for Republicans. And then, 2028, I feel like crypto would just be like this thing that gets demolished. So yeah, I understand why people are upset with him, but I don't know.
Okay, well, continuing on politics as it relates to crypto, U.S. President Donald Trump addressed the Future Investment Initiative Summit in Miami a few days ago, March 27th. Some quotes coming out of there. He said, "My administration has worked tirelessly to ensure that America remains at the bleeding edge of crypto revolution. We're really doing great. And if we're not going to do it, then China is going to take it over. They want to do it." Another quote, "We're going to be the undisputed crypto capital and the Bitcoin superpower of the world. Bitcoin's very powerful and it's all becoming powerful." On the Genius Act, he said, "Last year, I signed the landmark Genius Act into law, creating a clear and simple framework for dollar-backed stablecoins." And he emphasized this is a historic achievement. And then he also stressed that he will not allow Democrats and their big bank donors to deter progress on the Clarity Act.
Yeah. I'll tell you this, when I was in Hong Kong for Consensus, talking with leadership there and even senator for the parliament, they all had positive things to say about the progress America has made in such a short order, like everybody. And they were saying, yeah, like, we have to do the same. Hong Kong government, Hong Kong businesses, they have to do the same kind of transformation. So it really, a lot of progress has been made in a very, very short order. And again, like we talked about in our Person of the Year, 2025 Person of the Year, Crypto Person of the Year, it was Donald Trump, for better and for worse, right? It was kind of a double-edged sword. It was almost as much as the positive things that President Trump has done. It really does feel like there's almost an equal number of amount of harm, right? With the Trump meme coin, Melania, some of the stuff we're seeing with World Liberty Financial, and then just the raw amount of like hate from the other side of the political aisle for that. So
yeah, because anything Trump supports, the other side does not support.
Exactly. So the thing is, though, I guess some of these crypto people, Bitcoiners, this is where it's a little frustrating. It's like, what have you done for me recently? And so now they're saying things like, well, come on, de minimis tax exemption. We've been talking about that for this whole time. No, you haven't. All
right, let's move on to our last story of the week, which is the Bitcoin and stablecoin backed loans that have been launched on Coinbase in partnership with Better Home and Finance. So what this is you can use your Bitcoin and USDC as collateral to get a down payment for a home loan. The details of it are, for Bitcoin, if you're putting Bitcoin down as collateral, you need 250% more than the down payment you'll receive. So if you put $250,000 of Bitcoin on Coinbase, you would qualify for a $100,000 down payment loan for your house. If you put $125,000 of USDC on the plan on the platform on Coinbase, you can get that same $100,000 down payment. So for USDC, it's just 125%. For BTC, it's 250%. This is, of course, to reflect the volatility of the assets, Bitcoin being much more volatile. Interesting that you still need to over collateralize for USDC. But the point is, in either of these cases, you don't actually have to sell your asset. You do have to custody it on Coinbase, but you don't have to sell it. So there's tax implications there. You can get the down payment you want for your home without selling.
Yeah. So this is obviously exciting for a couple of reasons. First, that this is just a further step of recognition that Bitcoin can be used as collateral. And this allows Bitcoin to enter into TradFi markets as collateral, right? For lots of various things. More importantly, like all the kind of smart, rich people, they never sell their assets. They just take loans out of them. So it allows you to do that, invest smartly, use your assets wisely. It is interesting, though, that, I think it's good that you have to over-collateralize the Bitcoin so much. I wonder how much this crypto price volatility will come into play at some point in the future. Right now, it's probably good, right? Bitcoin's down 50% already. It doesn't seem like there would be any trouble.
So if you took out your loan now, it's much less risky than if you take it out, when Bitcoin is already up 3x on the year or something.
Yeah, exactly. So, But you could imagine, let's say you did this when it was 126,000 in October. You'd be sweating now a little bit, I think, adding to your collateral. But again, good progress.
Better than selling.
Yes, much better than selling. Good progress. Good to see. I think this is just the beginning, right? You've already seen some Bitcoin loans before. I forgot we covered a couple earlier, maybe or late last year. But you can see now it's entering kind of more mainstream stuff. Fannie Mae, Coinbase. Oh, you'll probably see this start to spread to even more traditional financial players who allow you to do this kind of thing.
Yep. All right, David, that wraps it up for this week. Thank you, as usual, for your insights. We'll be monitoring the situation throughout the week, and we'll be back on Thursday or Friday for Token Narratives, where we'll dive deeply into one or two specific themes, and then back again next week for the weekly or news recap for the week. All right, have a great week, everyone.